Hey guys, welcome and welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor, and today's video is gonna be about AT&T. So this video is about AT&T stock analysis, but not in-depth analysis. Here I will be covering my own opinion and why I'm buying this stock again at this particular dip. So stay tuned, watch the complete video as we will be covering why AT&T stock has been falling down so dramatically and is it still valuable to invest or not. But of course I will be just portraying out my personal opinion. So again, I'm not a financial advisor guys, and please do your own due diligence. Then now let's get into it. So of course guys, today's video is about AT&T stock analysis, like you must have read from the title of this video. But again, this is not an in-depth video. I'm just covering this video shortly because I personally am buying this company and I wanted to just bring up this particular company up to your attention, especially when AT&T now is trading at 11-year lows. And of course the dividend yield is rising, but for now it doesn't matter. What matters is the stock price at such low prices. Is it valuable to invest in this company? In my opinion, I am buying and it is valuable. Of course, there is a chance that it can fall further. Of course, it can fall further. But for me, this is a good opportunity. It is just my personal opinion. And this is why I'm making this video, that why I'm buying this stock. So first of all, let's cover the reasons why the company is underperforming. So guys, the first and the foremost reason why AT&T is underperforming so badly and is on such a selling streak is because of its merger with Warner Media. So AT&T, being a telecom giant, is trying to expand its business, expand its horizons through media industry. Yeah, online streaming media industry. And therefore this has created a lot of skepticism for the investors, for the shareholders about the company's future earnings power, its debt reduction, because of course after this merger they will have a huge amount of debt on their balance sheet, and therefore its dividend payment abilities as well, which we'll get on to in a moment as well. But guys, of course I understand there's a huge competition in online media streaming industry. We have Netflix, Amazon Prime, Disney. But guys, we have to understand that they don't have to acquire a huge amount of chunk from this industry. They already have a well-established business in the telecom industry, and this will, of course, I'm not saying that the business won't suffer for 1 or 2 years, especially in 2022 when the merger is finally accomplished. But what I'm saying is that I'm not holding this stock, or I'm not buying this stock for holding it for 1 or 2 years. I'm buying this company for holding it for 5 to 10 years, next 5 to 10 years. And I'm damn sure. And of course, we will also see soon the earnings will be out as well. And we will see that how well they're performing. They have a growth rate of 6 to 7% year over year, guys. So it's not that big, I know, but it's not that small as well. And of course, on top of that, you have a dividend growth rate as well for the company. Of course, they will be cutting on their dividends, like I said, which we'll get on to in a moment. But in long term, guys, I do think with such, especially at such price, I'm pretty sure that my decision is right to get into this business. But again, guys, that's just my personal opinion, and I'm in no way asking you guys to buy this company. Okay, please do your own due diligence. I'm just trying to give you guys some information which I think is valuable and before making any decision. So let's get on to the second reason why the stock is tumbling down. Okay guys, so the second reason why the stock price for AT&T has tumbled down further is because recently some analysts actually downgraded the price target for AT&T. Like you can see here, one of the analysts from Barclays, Kanan Venkateshwar, downgraded his price target from $34 to $30. Now guys, I'm not saying that these price targets are BS or these analysts are 100% wrong, but I'm also not saying that these analysts are 100% right. In the end of the day, they are just humans like we retail investors are, and their valuation model is just based on future projections and assumptions. Anyways, we retail investors should also evaluate the companies in which we are investing in our own way, based on our assumptions. Every valuation model, guys, is based on just assumptions and projections. And every investor, that's why not all investors have the same price target. Yeah, because every model is based on assumptions and every investor has their own assumptions. Some are bullish assumptions, some are bearish assumptions. So that's it, guys. Yeah, I'm not saying that you should be completely ignoring these price targets, but also your decision should not be solely based on these analyst price targets. I'm never buying or selling a company because I see that price targets have been lowered down or has been increased. Yeah, for me, it is okay, a news to look at, but that's it. And the reason behind why they have lowered the price target is more important than the price target itself. Please remember that, okay? So this is the second reason why, yeah, investors got panicky and have been selling. So in my opinion, this reason is not that important. And now let's jump on to the third important reason why I do think that this is the most important reason why AT&T investors are actually exiting this company. So guys, the third and the most important reason in my opinion why the stock price is falling and why the shareholders are exiting from this company is because, guys, AT&T has been looked upon as an amazing dividend aristocrat with an yield of 6 to 7%. Okay, and I do think that approximately 7 to 80% of the investors out there who are invested into this company are there just because of their attractive dividend yields. Okay, which is not that bad, but which is not good either, because when we are investing, we should also think about the business. But anyways, that's a different story. So this news, when it came out, I think that many investors actually exited from this company, and it resulted in further fall down of the stock price. So it was decided by AT&T that after the merger is completed, after the deal is completed, the remaining entity of AT&T will have a dividend payout ratio of just 40 to 43% compared to the current payout ratio of 64.5%, which is a good drop, guys. So it might be that the dividend yield might look like 4 to 5%. Of course, it's just a guess. It depends upon the stock price. But that's the reason why I think that people are actually not happy with this, and they are selling off their share prices. And of course, it actually resulted in further sell-off because the dividend date was, I think, in September or October, and after the investors got their dividends, they exited further. So that resulted in further fall up to 4 to 5% in the stock price. But guys, this is a misconception in my opinion, because if the dividend yield falls, yeah, does that mean a lower yield in your investment overall? No, guys, this is a misconception, okay? Yes, the falling of the dividend yield will affect your yield, but you should also see that the stock price is at all-time lows and 10-year lows, guys. So, for example, if you invest right now and the stock climbs up to $39, your yield, overall yield, will be higher than 8 to 9%. Just think about how your overall investment will be in long term. Don't just think about the dividend yield, think about the business as well. Think about how the company is diluting its shareholders. Yeah, think about everything. Think about the financials, think about the valuation. This is not going to affect your overall yield in a really drastic way. And guys, to be honest, 40 to 45% of a dividend payout ratio is rather more safe and more comfortable for me as an investor, because that might also mean for me that AT&T wants to remain consistent in paying off their dividends. Otherwise, in my opinion, they would have kept, let's say, the dividend yield rate as high as it is right now, like many other high yielding dividend companies out there who don't even generate enough cash, and still, in order to attract investors, they take a huge amount of financial debt and to pay out their dividends. Now, of course, I'm not saying, guys, in any way that AT&T will never ever cut off their dividends, but then that's a risk for almost all high dividend yielding companies. But on the other hand, we should also know that AT&T has been there since decades, yeah, and is a dividend aristocrat. And they would like to keep that image, in my opinion. And with this scenario and with this approach, I don't think they are planning to cut off their dividends. And yeah, that's why they have reduced the payout ratio. And again, guys, I guess the yield rate might fall up to 4 to 5% from 7 to 8%. And guys, that is still a decent annual yield in my opinion. But again, that's just my personal opinion. It's your decision in the end. I am not investing into this business just for the sake of dividends. Dividend is for me attractive, yes, 6 let's say 50% why I'm interested into this business is because of its dividends, but the rest 50% is especially now when the stock price is at such an attractive valuation. So guys, like I said, I want to keep this video short, so I won't go much further into details, but those were the three basic reasons which I think has been affecting the stock price a lot. And like I said, I am buying into this company, guys. I'm buying a business. I'm not buying a company just because of its dividends. I'm buying a business, especially because of its attractive evaluation at which it is sitting right now. Now, guys, yes, I do understand that after this merger, they would have to, let's say, suffer 1 or 2 years, especially in 2022 when the merger is finally completed, because they will have a huge amount of debt on their balance sheets. But guys, like I said, I'm not investing into this company for 1-2 years. I'm looking in for long term. And guys, you should not forget that the remaining of AT&T will be focused exclusively on telecom services, guys. And this company is 150-year-old and is an American blue chip company, and it has its roots into this business. Yeah, and with the technological advancement, AT&T will also be focusing on expanding its fiber optic broadband footprint to more homes and businesses while building out its 5G wireless network. Yeah, of course, the media company with Warner Bros. Discovery will also be doing its own global streaming based strategy, and this is one of the reasons why people are actually worried about the business, because they think that there is no strategy for the remaining business, for the media business. But guys, a business merger doesn't happen just like that, especially such successful businesses who are there since decades. Okay, of course there's a plan behind. There is a huge scope, in my opinion, and I do understand that there is a huge competition out there. Yeah, and yes, the company would have to spend billions of dollars to also for their wireless spectrum and licensing and this and that, and this will result in the delay in the debt payment. Yes, this will result in the debt payment delay, but like I said, I am waiting for this business to flourish in long term. So I told you guys what can happen, what are the drawbacks of the company as well, what may happen in the coming 1 to 2 years. There is a huge amount of debt, and yes, they might not be able to pay off this debt quickly, but because they are, let's say, they again started an expansion. So let's consider this company as a fresh new company. Okay, and for a fresh company, they need time to grow. They need time to generate cash flow. But the good thing is that the existing business is already generating a huge amount of cash flow. So you have to think that if they're cutting on their dividends, they have to do that because, guys, they have to eventually put more money into the business after this expansion, because it's a new phase for them. Okay, so yeah, people might see this as a bearish sign that why they are getting into the media business when there's a huge amount of competition. But for me, it is a bullish sign that they are thinking apart from their core business. Yeah, I do understand that this might sometimes go wrong, but I do think that Discovery is not a bad business at all. And if you guys want for me to cover Discovery company as well, I can do that as well. Please use the comment section down below. And guys, these two companies are amazing, and yes, it will take time for them to grow, but they will do this eventually. So that's it, guys. That's all for today. I will see you in the next one. Till then, ciao.